Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Nandita Khemka. Well, Nandita, it looks like what a terrific Tuesday session we have been. Bulls have been raging on for the fifth straight session, and Sensex and Nifty has hit a new lifetime high. Though we saw initial drop in the markets in the initial session, but Sensex and both Nifty both recovered to clinch fresh all-time highs. Sensex mounted on that 85,000 mark for the first time, and Nifty also broke the 26,000 barrier in the fag end of the trading session. Now, experts that I spoke to are also eyeing for Nifty to cross to the 26,200 mark in the upcoming session. But in the end of the trading session, Nifty failed to hold the gains, ended up mildly in green. But Nandita, what do you make of the market texture, given that we had a strong global handover as well, and all eyes were actually popping on the screens for Nifty to clinch that 26,000 mark?
Was of course a terrific Tuesday and a milestone one at that, given the fact that we have conquered that 26,000 mark in 38 sessions. So the Sensex, in fact the Nifty took 38 sessions to cover the journey between 25,000 and 26,000. Of course, we hit an intraday high of 26,011, and then soon after there was a bout of profit taking that kicked in. We saw volatility at highs, which is of course the norm really. When you are at highs, you do see some bit of volatility kicking in. But the technical analyst was saying that 26,000 was the resistance level, and a lot of call writing was happening at that level. So yes, there was a chance of the Nifty cooling off a bit at this level, which is what happened today. But experts, as you mentioned, are betting on the Nifty crossing that 26,200 level on the upside. In fact, 26,272. That's the kind of level that experts are really watching out for on the upside. Of course, in this leg of the run, between 25,000 and 26,000, couple of stocks that really stood out were the likes of Bajaj Auto, Shriram Finance and Bharti Airtel. These were the stocks that were among the top performers in that 1,000-point move. But Lovisha, aside of that, which are the sectors that took center stage today?
Well, metal stocks looks like a lot of outliers, standout performers they were in the today's trading session. But IT stocks saw a little bit of initial profit booking in the initial session, but in the end of the trading session we saw a little bit of buying. It ended up about 0.6% higher in the end of the trading session. But IT stocks, they continue to remain in focus, because last week they had declined about nearly 3%, and today also we saw a 0.5% cut in the initial trading session. So despite the US Fed's 50 basis point rate cut, IT stocks still have been languishing in trade as recession fears have taken a front seat. Fears of economic slowdown in the US have raised questions whether or not the revenue trajectory of IT stocks would be where the guidance have been, and whether there would be a revival in client spending for IT companies. Now, typically, a rate cut scenario benefits Indian IT companies by lowering borrowing rates, but it is rest to see whether or not IT stocks will be kicking off. But other than that, we have seen metal stocks. Metal stocks, one of the standout performers of the day, and it has gained about 3%, ending with a green about 3% after China announced stimulus measures. So, Nandita, metal stocks, they have been gaining ground in today's session. What do you make of it? Where do we stand from here on?
That's correct. Of course, let's just point out the factors that led to the rally in the metal pack, right? Because the Nifty Metal Index, of course, as you rightly mentioned, rallied somewhere around 3% or thereabouts. Of course, the index is near 2-month highs, and of course that was because of the measures, the stimulus measures that were announced by the Chinese central bank. In fact, in a rare address, the central bank has said that it would in fact cut the reserve requirement ratio, the amount of cash that banks are required to keep, and that will be cut by somewhere around 50 basis points, although they haven't really given a timeline as to when they'll do that. But chances are that they could do that by year end itself. And if that happens, it would inject somewhere around £1 trillion in the long-term liquidity in the financial market. Now, the People's Bank of China has also said that it will cut rate on existing mortgage loans. It will also cut the 7-day repo rate by 20 basis points. In fact, the moves on the metal pack were quite sharp. You had the likes of Tata Steel, Hindalco emerging as the top gainers on the Nifty. In fact, Tata Steel gained somewhere around 4% or thereabouts. But if you look at the commentary coming in from the brokerages, Anand Rathi has said that, of course, historically we have seen metal stocks react to any kind of stimulus or positive data coming out of China, but it has been pretty short-lived, and which is why, because Chinese housing market has been struggling for the last 4 years, and unless there is stabilization in prices, and of course there is some reduction in inventory, unless that happens, any government initiative will be kind of inadequate, so to say. So the measures have to be deep rooted that can actually mitigate the kind of stress that is there in the Chinese housing market. But Phillip Capital is pretty much positive on metals. Their top picks are JSW Steel, JSPL, Nalco as well as Vedanta, and they are recommending to accumulate NMDC and SAIL, Steel Authority of India, in a staggered manner. So all in all, of course, metals were bolstered by the kind of measures that were announced by China, but it remains to be seen whether these measures can actually tackle the kind of crisis that's playing out in the Chinese market. But aside of that, Lovisha, what are the other stocks that are on your radar this afternoon?
Well, other stocks in our radar is Bajaj Auto. Bajaj Auto has been garnering limelight in recent days. It has been hitting record highs day after day. Today also, in today's session, we saw that it hit a new lifetime high of 12,451 mark in intraday deals. And with this, it has already risen over 80% so far this year. What are the factors leading to these gains? It is because that the bullish sentiment has come after it launched its world's first CNG motorcycle, Freedom, which it launched in July. So since July, Bajaj Auto has already sold over 6,000 units, and experts are now betting on that the sales could rise about 20,000 units on a monthly basis. The Freedom 125 bike is basically powered by a 125cc engine, and it has an ability to toggle between petrol and CNG powertrains. Even yesterday also, HSBC had come out with a note saying giving a target price of 14,000 rupees for Bajaj Auto, which means that it has another leg of 12% upside from today's day high. So even in two-wheeler electric vehicle, we can, if we have to see the transition of how the two-wheeler electric segment is happening to electric vehicles, we can see that Bajaj Auto has seen it's improving its market share to about 21% this month, up from 19% in previous month. So that is coming on from Bajaj Auto. Let's see whether or not Bajaj Auto has more legs for an up move. We have seen certain management commentary coming in from Bajaj Auto saying that the fair value price of the stock could be up to about 20,000. But let's see whether or not Bajaj Auto can hit those levels. But let's see next what is on your
radar.
Right,
Rajiv Bajaj really. No, so Rajiv Bajaj really made that comment in an interview to CNBC TV 18, last week. But I just want to point out that CLSA also came out with a report on Bajaj Auto last week, where of course they have taken note of the new launches that they've made, from the Triumph stable. But they've also pointed out that exports remain a cause of worry, and their target price is implying a 40% downside from the levels where Bajaj Auto is at the current juncture. So 7,000 is the target price that has been outlined by CLSA. So yes, we'll have to see whether or not Bajaj Auto really has the legs to go on to 20,000 or not. But of course, the stock on my radar today is Ipca Labs. This is one share that hit a fresh record in today's session. Of course, there is a report by Nomura, wherein they have a buy rating on the stock. Target price has been raised to 1750 rupees, which is a potential upside of 20% from yesterday's close price. Now, why is Nomura bullish on Ipca Labs? It believes that the domestic formulation business has been handing in consistent performance, and it has the legs to attract higher valuation multiple. Now, and it can contribute somewhere around 50% to its EBITDA for FY26 and FY27. Nomura has also said that there is scope for improvement in the other businesses as well, like generics and API business, in the near to medium term. In fact, it also sees cost and revenue synergies emerging at its subsidiary Unichem. In fact, Nomura has projected a 30% earnings CAGR, compounded annual growth rate over FY25 to FY27 for Ipca Labs, and even after FY27, it expects the growth momentum to continue. And the company, of course, itself has pointed out that it is expecting EBITDA margin to reach 25 to 26% levels, vis-a-vis expectations of 23% or thereabouts in FY27. Look at the stock performance. It has been extremely good. It has been in the pink of health, so to say. Ipca Labs, 30% up move in the last 3 months, and the 1 year up move is in excess of 65%. So yes, Ipca Labs in the pink of health for the at the current juncture, but a 20% upside is what Nomura is expecting on this particular stock. Lovisha.
Okay, so Paytm, we can see Paytm has been doing quite well in today's trading session. It has risen about 4.5% in today. And we can see that, it has been giving positive monthly returns since the month of June as well. It has gained about 63% in the past 6 months. Now, why the sudden surprise in Paytm stock today has come out? Because after the MK Global came out with a note saying that, they have upgraded the stock to add from reduce, and they noted that the Paytm's loan distribution business is expected to gain pace, while its broking and insurance distribution segment has already turned profitable. They expect that the merchant lending business is also doing well and is likely to be a growth driver till Paytm introduces a new product. So in the second quarter, we saw that the Paytm had sold off its operationally heavy entertainment business. Now, this is also expected to augur up cash reserves for Paytm. And it is also likely that, the brokerage firm has also said that it is expected to turn EBITDA positive by the fourth quarter of this financial year. Do note that in the first quarter, Paytm's net loss had expanded to about 850 crore rupees, up from 551 crore rupees in the previous quarter. So Paytm, that's where we are on the radar. That's where we're coming on Paytm. But next up, let's see the market sentiment has been positive in today's trading session. We saw Nifty and Sensex have been hitting like record highs. And also that, we saw some of the top gainers as like Tata Steel, Hindalco, and as well as Power Grid, Tech Mahindra as the top names. But given that we have the monthly expiry due this week, it is to be noted whether or not the volatility is going to be ensued and whether or not the bull run keeps on sustaining its momentum. Nandita, where do you think, where do we see the markets in the coming days? Do we expect the bull run to sustain, or should we expect some fizzle out in the rally in the coming days?
All those technical analysts that I have spoken to have mentioned, or most of them have mentioned, that we are in the overstretched zone when it comes to technicals. And they won't be surprised if there is a bout of profit taking, but of course no structural downside expected at the current juncture, because the undertone remains bullish. FIIs have made a comeback. You've got strong global cues as well. There has been a pivot in terms of interest rates as well, and of course the next trigger, of course, will be the earnings season that will kick off sometime in October. And we have the RBI policy as well on the 9th of October. So yes, there are these triggers to watch out for, but the undertone remains bullish. And as I mentioned at the start of the show, 26,200 to 250 is the kind of resistance zone that technical analysts are keeping an eye out on. But otherwise, of course, it has been a milestone day, and metals have emerged as the top gainers today. We saw the Nifty cross 26,000, Sensex 85,000. So yes, all those milestones have been conquered. But now, of course, if it comes to getting into the market or buying at these levels, the advice is pretty much clear: wait for dips, don't jump in. But of course, be invested in the market. That's what experts have to say. But I think on that note, we've come to the end of this edition of Closing Bell. Of course, ending the day on a happy note, even though we saw a flat close. But the big story, of course, was key milestones have been hit today. But of course, we'll be back with the opening bell tomorrow morning at 9 a.m. To understand what should one really do at these levels, whether one should buy or whether one should take some profits off the table. We'll get you all that, and we'll also be talking about all the stocks that have been focused tomorrow morning at 9 a.m. Don't forget to tune in. But for now, it's a goodbye from me and Lovisha. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.